Good evening, all. Ira Epstein, and here we are, and we are now on Thursday, and this is the 8th of January, 2026, and we're about 6:20 p.m. Central Time. Wow. I'm probably no more than a week or two away from I'm back into the videos and have my screens working. I'm trying to be optimistic, but all the parts that we needed, new screens, things coming out of walls, it's all been done for the studio. And it should be here in the next few days. And as they arrive in, then it starts getting interesting for me. I really miss doing that. So look for that to happen. Now, it's an interesting evening. Let's go to the news if we could. Tomorrow's the big day. We're going to get the December non-farm payrolls data, and that comes out at 7:30. They're looking for 75,000 new jobs compared to September's 64,000. The difference, of course, is that, you missed when the government was shut down some time and frame in there. The December jobless rate is expected to fall to 4.5%. Many analysts believe if that is the case, that another rate cut is immediately on the table. If it's 4.6, they think that won't be the case. Average hourly earnings are expected up 0.3% month over month and 3.6% year over year, running, if you will, just a little bit even, a little bit ahead of inflation. U.S. Census Bureau monthly housing starts and building permit data is going to come out Friday morning at 7:30. They're looking for the permits around 134 million units. The University of Michigan preliminary January consumer sentiment indices will come out at 9. Now, late in the day, President Trump ordered Fannie Mae and Freddie Mac to buy 200 billion in bonds with profits they made under his first term. That has sent Rocket Mortgage, XHB, ITB all shooting higher tonight. We'll see how that all works. I mean, he's really pulling out everything he can to get the housing market going. The U.S. Senate today voted to rein in President Trump's military action in Venezuela. Their bill now goes to the House, where it's got a little bit of a rougher road for that. But there were crossovers in the Senate to make that bill pass. So some Republicans were quite angered that the president took them out of the loop. And the House passed their own version of an Affordable Care Act insurance bill, again, showing that Speaker Johnson lost control of that. That will now go to the Senate. It's a changed bill. It's not what the Obama Affordable Care Act looks like, as I understand it. There's going to be income provisions put into it as well. So if you make over a certain amount, you're not going to be able to get into those programs. I don't know much more about either of those, but those are definitely areas that the market's going to look at and like. That's what I can tell you. I do want to remind you that the New Year research and course sale ends on Friday. So if you're going to take advantage of this and you're waiting, you're going to miss out if you don't do it now. I don't know when I will put out the weekly updates, so I'll certainly be putting out my morning flash update, but the other updates might come out on Saturday, and you won't be able to see me talking about this. So if you're going to take advantage, this is absolutely the time to do it. It's 40% off any of the programs that I put out for the futures, the Spider ETF, and 40% off any of the courses that I have. So this is a real opportune time for you, and I'm going to repeat. You're not going to get 40% off again, so this is something to take now. You can go to iraepstein.com. That's one way to get this. The other is you move your cursors up here. You'll be able to see an icon that'll take you there, or if you're watching on YouTube, there's generally an icon right here. Now, as you can see in the early evening trade, the S&P's up a little bit along with the Dow. The NASDAQ, which has been very strong, along with the Russell has been strong. They are up a little bit tonight, too. Now, understand what's going on in these markets so that you can play with them. If we get a situation where the market thinks interest rates are going to be cut, that is bullish the stock market again. You're all over the board in the metal markets. As you can see, you were down hard in silver. I mean, real hard. And then you came back late in the day. Gold is lifting itself up again. The dollar was up a bit, but now tonight it's losing a little ground. And bonds and notes, well, they were down pretty good today. And now they're coming back, if you will, looking at the market with a little bit of stability going into, of course, the evening and, of course, whatever the morning is going to offer out of all these reports. Energy prices all higher across the board early on. So as we take a look at the gold chart, you're still in the bullish scenario. You're staying over the 18-week moving average of closes. When we come to the daily chart, you can see the action. You still haven't been able to get up over these highs. The pattern in the market changed tonight. You now are back in an uptrend with higher lows, higher highs, unless and until you take out the low of 44.15. So the market's made a stand, and look at the number it made the stand against. Do you see that red line, the 18-day average of closes? How often do you hear me talk to you that the market likes to go there and from there decide what the market's going to do? And today it reestablished, actually tonight, the uptrend again. So if it moves, one possible run could carry it to the upper Bollinger Band at 45.63, let's call that. In terms of momentum, you've taken the market away from the overbought condition, and now momentum is pointing higher. So we have upside bias because the market's over the 18-day average. The momentum is pointing up on the charts, and a potential target is up here as long as the market doesn't take out this low right in through here. So that's what I'm looking at there. The gold-silver ratio. I was telling clients today that it wouldn't surprise me. In fact, I think one of the smart things to do down here now is to start peeling off, if you're long the silver, short the gold, because the market's starting a little bit of a stall action. I have other proprietary work that I use, and I don't show everything here, but that's what I'm beginning to see. In the silver market, notice how the market got up, and it's just corrected out of an overbought condition. The trend is most certainly still to the upside. If it falls, 71.76 could be the support. You can see it got to 73.53 on Thursday, and for Friday, you're back up already to 76.67. So the market was down 240, let's call it 247. $2.47, not 200. I'll make it easy. And it's making back just over about 40% of that tonight. But the market has been stalling out. Gold and silver hit what we call third price counts. That's not to say they can't go on to fourth, but those fourth are far, far away from these levels. In the copper market, you are still in an uptrend. You have the pattern here, as you could see, of higher lows, higher highs in the chart. Momentum is correcting and corrected at this moment where neither number's over 70, so you're not in overbought territory. And in platinum, you're running into a pattern of lower highs, lower lows. But as long as you're over the 18-day average, you don't even think about the short side. It's a correction that could go to that 18-day average and hold it there. Last but not least, the March dollar index up to the upper Bollinger Band. Is it going to be able to build on the jobs report and accelerate tomorrow? Or is it going to reverse back into the Bollinger Bands is going to be the big question. We'll find out around 7:30 for the first leg of what it's going to try to do. So I want to remind you all, the sale ends tomorrow. Move your cursor up here if you want to take advantage, or go to iraepstein.com. That's another way to go ahead and do it. With that, I'm Ira. You have yourself a good evening. I'll catch up with you all tomorrow.